Hey guys, welcome back to the channel. In today's video, I'm going to be providing a long-term market update for Ergo. We're going to be talking about the most recent reclaim of the previous range, coming back above the level right around $1.62. That was the level that we saw act as support all the way back here in March of 2021. Pretty key pivot point as far as market structure is concerned. And then we also saw that act as support right here in July. And from this point, Ergo was able to rally to the range highs up around 180%. So this is a very significant reclaim coming back within the range, and we did see a bounce off that support right around $1.10, which was the previous resistance from back here in September 2020 during that accumulation phase. And then we're also going to talk about some levels of resistance to watch out for and some longer term moving averages to keep in mind as well. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. Feel free to go ahead and check that out as well. I'm fairly active over there with crypto content. So once again, Ergo has reclaimed the range, and at this point, it's going to be very important to watch out for if Ergo can continue to remain above this level, mainly because as long as Ergo holds this as support, it really lets this look like a longer term zone where we had a massive fake out, a deviation below the range, and the price just did not want to accept below that $1.60 zone. We saw that spike and the surge off of the previous support. So in general, this is looking much more positive and constructive now that we have seen the deviation. And essentially, it's the same thing that we saw on the upside on both the attempt right here in April as well as September, where we had a brief move outside of the range and then price did not really want to accept out of the range. It comes right back within and then it reclaims the level. Same thing, same type of pattern. It's just to the reverse and to the downside. And we just want to see this continue to hold. So zooming in here to where we are today, it is nice to see several daily candles coming up above this region. And then looking at here the weekly chart, you can also see a few weekly candles closing above this and also closing above the candles that we saw from back here on the pivot in July. In addition, we're also seeing the majors, Bitcoin and Ethereum, print some pretty impressive longer term bullish signals. And although Ergo is certainly not entitled to whatever Bitcoin and Ethereum are doing, it is nice to have for the altcoin market that strength within the major and the blue chip cryptos, because it can relieve a lot of that stress that altcoins have, where say if Bitcoin were threatening a lower low at that $16,000 region, very few investors would want to go outside that risk curve to those speculative altcoins. So we're just seeing a little bit of that faith restored into the altcoin market on this most recent rally. And if Bitcoin and Ethereum can continue to have that strength, where say if Bitcoin can consolidate above $22,000, I think that's going to really establish some support here for Ergo and many other altcoins, where investors are going to have a little bit more confidence in the market, which is exactly what we want to see for the longer term for these altcoins and for the entire market. So if we do have, say, more consolidation in this region, I think Ergo is going to gain a lot more support at this zone. And if we can consolidate, that will really sort of cool off this most recent rally. We are a little bit overextended in the short term, up around 80% in just the past 2 to 3 weeks. So at some point, I do think we're going to consolidate, cool off this rally before potentially another leg up. And the next level of resistance that we would meet is going to be right around the middle of the range at $2.67. And then if that can be reclaimed, then we can start to look towards those range highs. And on top of that, we also do have some confluence with this zone of resistance at the middle of the range with the weekly moving average. Looking at the 50 SMA, that is a region that we saw rejection at back here on the lower high in August, and that is roughly around the middle of the range as well. So there is confluence with this region being a strong level of resistance. So I would expect at some point, if we are retesting that, that could be a very significant zone where we might find some resistance. But again, I think the more important thing is to focus on holding above the range lows as support. And then if we can have some sort of turnaround point from here, bouncing off this as a region of support, then we could look to this as resistance. And then if that can be reclaimed, then the range highs. But until that happens, I think we're just really playing it level by level here. If we can continue to hold above the range lows, that is a bullish sign that prints this longer term deviation. Same thing that we had on both of these moves, which as you'll notice have been pretty powerful moves because it has led price to go back down to the extremes. So definitely pay attention to that into the next few months. I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, I hope you guys enjoyed, and I'll see you in the next one.